difficulties, but I think we're squared away and good to go. So hello and welcome to how to build credit for your business. A little bit about myself. My name is Andrew Oswalt. I'm a senior tax analyst at TaxAct. I'm currently in my 10th development season with the company, which has really flown by. I was in public accounting for a couple of years before starting my career here. I graduated from the University of Iowa with a degree in accounting and finance. Had my CPA license since 2011 and maintained that. My current team here at TaxAct, we implement federal and state tax code changes. So every year, Congress and state governments change the tax code. We review those changes, and then we implement them into our software so it's accurate, and then we can provide the best user experience possible. So this also means that we have really good relationships with the IRS and state governments. And actually, for the last couple of years, I've served as the subject matter expert for the state of California. So I've done a lot of work with them. I'm sure there's a lot of California sellers here in the room today. So let's see. Okay. I'll get that slideshow going. Okay, one second, please. Okay, we're just gonna stick with this. All right, so a little bit about TaxAct. We are a leader in the industry, and we made it easy and affordable for individuals and businesses of all type to file their tax returns, and also throw out that we support nonprofits and estates and trust tax returns as well. We really feel that everyone should be empowered to do their own taxes. And since 1998, we've had over 90 million e-filed returns, which I think I was in 5th grade back in 1998. So we've been around for a while. We do have a 100% accuracy guarantee. So we're going to guarantee the calculations on your return, that it's all accurate. Besides myself, we have a couple other CPAs on staff, a couple EAs, and everyone in the tax development department has a background in accounting and finance. So we got some good brain power in that department. Easy import. I can save time, minimize data entry errors by importing data from year to year. Now, if you use one of our competitors in prior years, we do allow you to do a PDF import into our return to, again, save time on data entry. We're going to find you all the deductions and credits that you're entitled to. We'll ask you about all your business expenses, help identify the ones that you can deduct, reduce that business income so you can reduce your self-employment income or self-employment taxes and overall taxable income. And then, of course, we have unlimited free support. You get all the answers you need in the Answer Center. We'll help you with your account technical questions as well as any tax-related questions regarding your business tax filing needs. And I should also mention our data privacy and security. We're a pretty heavily regulated industry, so we got to meet a lot of strict standards from the IRS and from state governments because we're there to protect your most sensitive data, which is your tax information. So a brief overview of the agenda today. We're going to define what business credit is and how to check your business credit score. What are the benefits of good business credit? Talk a little bit how your personal credit score might impact your business credit score, how to establish your business credit history, and of course, maintaining a high business credit score, because once you get a high score, you want to keep it there. Okay, so what is business credit? So just like your personal credit score, your business credit score is a number that's going to help lenders predict how likely you are to pay a loan back on time. Your business credit history is a good indicator of how reliable your business is financially. So, the higher the score you're going to have, the more likely you're going to get favorable loan terms. You may qualify for a larger loan amount. And a good score, like I said, is going to help you obtain that really good financing. Conversely, if you have a lower score, the loan's probably going to cost you a little bit more. You're going to pay more interest over time. You may even qualify for a smaller loan amount than you were really wanting. All right. So the benefits of good credit. It's going to help you qualify for financing. It can be pretty difficult to secure new vendors or business loans without it. It's going to qualify for those lower interest rates, which saves you money. So running like a sustainable small business that you intend to grow, it can be pretty difficult without proper financing. And that's why, that's important. Now, a good business credit rating allows you to negotiate favorable terms with new vendors Think about lower prices, lower down payments, and longer trade terms such as net 30, which of course you can invoice. You have 30 days to pay. Maybe that relationship grows, they'll give you a net 60, net 90. You think about if you don't have a prior relationship with a vendor or a lender, that credit score really is the initial trustworthiness that you're showing to that lender. Without that relationship, that's a good plug in there. All right. So how to check your business credit score? Again, there are three main bureaus, just like personal credit score. So those are Dun & Bradstreet, Experian, and Equifax. Now, checking your business credit file a lot of times requires a small fee, but just like for personal credit cards, like myself, I have a credit card that allows me to access my Experian credit report for free. So if you're looking into getting a business credit card, that's something you may want to consider when you're selecting a card if it allows you free access to your business credit report. Excuse me. So each bureau has a different scoring method, but really using a lot of the same basic information to determine your score. So think about your company size and age. So a lot of empirical evidence shows over time that the smaller the business is, the more likely they're going to fail to make timely payments. Whether that's true for a lot of people or not, just the overall evidence does show that. Same thing with the age of the business. Newer businesses are less likely to make timely payments, just because you think about it. If a business has been around for a long time, they're obviously doing something right. So that's why age is considered into the scoring. And again, if they've been around a while, that means you have a stable business as well. Credit utilization, think about your total credit limit. So if your total limit was say like $10,000 and you are using $2,000 of that, that means you've utilized 20% of your credit limit. Now, general rule of thumb is that you want to keep that credit limit utilization at 30% or less. Now, there are times that you may need to go above that utilization rate, and that's fine, as long as that next billing cycle, you pay it off enough to get it back down to that 30% or lower. Generally, if you're above 30%, that is going to impact your credit score negatively. And then your business's payment history, again, it shows longevity, stability. If you have a really old financial account that you're still using, that's great. That's going to positively impact your credit score. So, think about that first account you open. Try to keep using that account, because really you want to keep that around to show that, hey, look, this account's been a long time. I'm a stable business. I'm trustworthy. All right. Will your personal credit score impact your business? Now you think about it. If you're starting a new business, you started a business last year, you started a business this year, you probably don't have much of a business credit score to go off of. So the lender is going to look at your personal credit score. Now, if your personal credit score really isn't where you want it to be, it's not an end all, but it is a starting point for a lender. So in terms of that, you may want to look at ways to increase your own personal credit score, which a lot of the items I've already talked about are good ways. Try to pay down any accounts that may have the highest interest rate. Try to make payments in full. Definitely pay the minimum payment on time. Making even one late payment can have a negative impact on your credit score. So the longer you've had a business and have a business credit score, the less likely your personal credit score will come into play. Really, this applies to new businesses. Okay. Establishing your business credit history. I'm going to talk on this slide a little bit longer because it does have some tax implications, which that is definitely more my area of expertise, especially this first bullet point. Excuse me. So you want to legally establish and register your business. Really have to determine how you want to structure your business. So the most common, easiest form is a sole proprietorship. It's the most simple business filing. You're going to report all your income and deductions on a Schedule C, which is part of your individual 1040 return. There's a lot less compliance. You're really considered a disregarded entity, which all the income losses all pass through directly to you, the individual. Your business income will be subject to self-employment taxes, which is your share of Medicare and Social Security tax. And it's also going to be subject to regular income tax. So again, easy to file. However, your liability is not limited to just your business assets, but it's also your personal assets may come into play if a lender were to come after you for not making payments on time. You could also look at forming a partnership. This is a separate entity from your individual return. By definition, a partnership has to have at least 2 partners, so you can't just form a partnership by yourself. That's not allowed. There's a lot of flexibility in terms of ownership. You can have ownership by profit or loss or capital ownership percentages. Now the income from a partnership is going to be reported on what's called a Schedule K-1, and that's going to be reported to the individual to put that on their individual return, and that income is going to be subject to that self-employment tax. S corporation is another option. Again, this is a separate entity from your individual return. Now, the difference between this and a partnership is that there can be just one shareholder. So you yourself could form an S corporation, creating that separate legal entity. And then your income is going to be apportioned to you on a pro rata percentage. The big thing with an S corporation, your income is not subject to self-employment taxes, but you do have to pay yourself a reasonable wage, which I could get into that, but I'm not going to, because that's a really deep conversation about what the tax courts determine as a reasonable wage for a shareholder, based on business income and livability and poverty line. But that's always a fun with an S corps. And then C corporations, I don't really recommend for small businesses unless you're really looking to grow. I'm talking dramatic growth, like different types of stock, more than 100 shareholders and foreign shareholders. So that's because there's double taxation at the C corporation level. The entity is going to be taxed once, and then when the income's passed through and dividends, it gets taxed again at the individual level. And then the last one there is limited liability company, which an LLC can be actually treated as a sole proprietorship, a partnership, or a corporation, just depending on how you want to treat it for tax purposes. But the big thing there is that's usually a state level election, and that's going to protect your personal assets. And so only your business assets are at risk, in terms of lawsuits or lenders coming after your assets. There is a little bit more compliance with doing an LLC. Again, I'm going to refer to California. But if you're a single member LLC, you have to file its own separate tax return on a Form 568. And you have to pay $800 a year just to do that. So it's an extra expense with doing it, but it might be worth it just to limit your liability to business assets only. Then you want to check your numbers, your EIN, DUNS number, and your phone number. You want a separate business phone number because we get enough spam calls as it is, but you don't want to get a call from a potential customer or client and then ignore it because you think it's spam. But if you have a separate business number, more likely that you'll answer that number and not miss out on that opportunity. Then an employer identification number, an EIN. There are certain types of businesses that are required to have those. The top two is if you have employees or if you are a partnership or S corporation, you have to have an EIN, and this is really just a tax ID number. And then finally, something else you should consider getting is called a DUNS number. It's from the Credit Bureau, Dun & Bradstreet. It's used to track a variety of information related to businesses around the world, a lot of basic details, company name, contact, and then actually getting a little bit more complex financial data. But folks can get onto the DUNS website, look up your DUNS number, and see how creditworthy you really are, and kind of helps them determine if you're someone they want to work with, or if they want to partner up on a business opportunity. And then 3 and 4 are pretty closely related, opening business credit accounts and getting a business credit card. Definitely advocate for keeping your business expenses separate from your personal expenses for really 2 big reasons. One, if a vendor or lender wants to look at your financial data, you want to be able to easily show all your business expenses and income that you're taking on. And then also come tax time, when it comes time to file your tax return, it's going to be really important that you've kept your business expenses separate so you can know what to deduct on your tax return. If you include a personal expense on your business return, it's obviously not going to be accurate. You might get a little nice letter from the IRS kind of inquiring about that certain expense. And if you do it on purpose, that's just fraud. That's a whole different thing. But no one's doing that, right? But no, however you do it, if you keep your expenses like on an really old school, like a notepad, or even other old school on an Excel spreadsheet, those are 2 ways to do it. And there's tons of accounting bookkeeping software solutions out there, both desktop solutions and apps and on cloud-based solutions. Not going to advocate for one or the other, but definitely a lot of options out there. Also, for those folks that drive cars for business, there's a lot of good apps for tracking business mileage versus personal mileage, so you can accurately keep track of business expenses for your vehicle. All right, let's say you've achieved a high business credit score. That's great. Let's keep it there though. Because you can get a good score and then make one late payment, make 2 late payments, 3 late payments, and boom, it's gone right back down. So use a business credit card. Again, keeping those expenses separate helps you, keep track of the balance that you want to pay in full every month. Pay in full if you can. There will be times it might not make sense from a budget perspective to pay in full, but definitely recommend as often as you can pay in full. Even more important is paying on time. Definitely make the minimum payment on time. But if you can pay in full on time, definitely do that. Talked about credit utilization a little bit already, but that magic percentage of 30%, try to keep it under that. Again, you could be at 60%, because in 1 month you'd had to make a large purchase. Just get paid off, get below that 30% before the next billing cycle. Monitor your credit. So there's a lot of credit bureaus that they'll work with you. They actually have services, that will alert you of any kind of strange things going on with your credit report. But also it's on you too to look through it. And if you see anything that looks off on the credit report, report that to your credit card company, report that to the credit bureau. They'll work with you to get that removed and your credit report fixed because of it. And of course, this is good advice anywhere. Just develop good financial habits. Budget, save, and pay expenses on time, and track those expenses separately, personal versus business. That's probably the biggest thing I can say. Is just keeping those separate ledgers, however you do it. All right. So main takeaways: your business credit score is a representation of your business financial health. Are you financially stable? The likelihood that the business is going to make timely payments. You're not going to go into bankruptcy. And again, absence of prior business relationship. It's one of the first signals that are you trustworthy? And then good business credit is going to help obtain financing options with lower interest rates, which it's going to result in a cheaper loan. May give you access to more higher lines of credit. And then with a little time and self-discipline, you can begin to establish good credit for your business and set yourself up for growth in years to come, because longevity and stability is a lot of folks are looking for in business, and this will get you there. Talk real quickly about our eBay and TaxAct partnership. I'm sorry, I keep coughing. I have an 8-month-old daughter. Amazing things you can get from daycare. But eBay and TaxAct partnership. So you might be saying, hey, it's May 25th. We're kind of past the April 15th deadline. April 18th this year, that's correct. But if you've only filed an extension and you haven't actually filed your federal tax return yet, we're still offering 25% off. So if you did extend your tax return, you have until October 15th to file your individual return. You can still take advantage of this 25% off your federal filing. Or maybe you haven't filed your return at all. You missed the deadline. My advice, it's okay. Just file as soon as possible to reduce any potential penalty or interest. And in that same situation, you could take advantage of this offer. I think these slides are going to be made available. So there is that link there to claim the offer. We don't have anything set up for next year yet, but at least a little awareness, for when you get to tax year 23 as well. So with that, I do believe I've reached the end of my presentation. So thanks for taking the time to listen to me today. Hopefully it's been helpful. And we have about 9 minutes left. My colleagues have been monitoring the chat, so I don't know if there's any questions that have come up that they want me to address, or let's see. Oh, okay. So I see Donna. I'll address that one, the $600 reporting level. That's a really good question. That's something that we are definitely monitoring, because as most people know, the $600 threshold for sales is going to trigger the 1099K required filing, and there's a lot of pushback from I think almost everyone across the industry, taxpayers and software and Congress. So they pushed that back up to the $20,000 threshold. I don't know is the answer right now, but we're trying to update our support as often as we can, and then of course if that does go back down to 600, we'll be ready to help taxpayers along the way. So at this point I don't know, but we'll watch out for it. If there are any questions, I really, if I don't know the answer, I'm going to say I don't know, but we'll definitely follow up with anything I don't address today. Someone said my business account is a personal account. Do I have to change it to an official business account in order to have a positive impact on my business credit score? You don't have to. I recommend it for just tracking business expenses versus personal expenses. I don't think it's going to have a negative positive one way or another. Now, it's possible that maybe you have, let's say something, I hope it doesn't, but like negative happens in your business. Well, that might end up impacting your personal credit score because of that, the sharing of the accounts. But definitely it's not a requirement, just a recommendation on my part. In terms of where should you look for business credit cards, is it kind of cop out if I say Google? But I don't know. I do like a lot of what NerdWallet has, just to call out a specific brand. I like a lot of their stuff. Business Insider is another good one. I don't know. That's kind of a personal preference to kind of do maybe your own research a little bit on the web. But I know there are a lot of good ones out there that'll help you establish that business credit from the start. Established. Unfortunately, I don't have a lot of suggestions there for you. Michael asked that. Established LLC DUNS EIN 1 year ago. I'm glad you did all of that. That's good. All at once. Yeah, sorry. I can actually take that one, look into that a little bit more, Michael, and then I can follow up with you at a later time. Had one for my colleague. Had a sole proprietorship for over 10 years. How difficult is it to get a DUNS number? I would just start with it on the DUNS website, Duns and Bradstreet. I don't believe it's that difficult to do. Something, like I said, definitely look into, just because that's how creditors and lenders are going to look at that number, and it's going to really show your credit worthiness. So I don't think it's all that difficult, and something you want to do. A sole proprietor ever need an EIN? Limited circumstances, not very often that they need it. Generally, the number one reason for needing an EIN for a sole proprietorship is if you have employees, which means you're probably going to pay payroll taxes. So you're paying wages to those employees. That's when you'll need an EIN. There's also some limited circumstances with a retirement plan, a KEEG plan, where you'd want an EIN, but that's a pretty one-off scenario. So if you have employees. I see a question. I'm a single member LLC, but I've been thinking about going into a corp so that I can give myself a W-2 every year. I plan to hire 5 employees in the next year and a half. What should I consider before making that change? The big thing is, if you're going corp, you want to determine what reasonable compensation is. I would advise maybe working with finding the CPA to kind of determine that, looking at your business plan, what you usually make in business income every year, maybe what the cost of living is in your area, Amy, and you can kind of determine a reasonable compensation. Obviously, if your business starts to make more and more money, I think the expectation is that you'd pay yourself a little bit more as a reasonable wage. Hiring 5 employees again, having employees, you'll have to get the EIN, plus being a corporation, you'll need to get an EIN. And then kind of determine, I don't know if you're planning on bringing other owners in or not, but kind of the share structure of your company. How many shares is your corporation going to have? I mean, that's kind of an arbitrary number, especially if it's just yourself. You can just say the company has 100 shares and you're 100% owner. That's completely fine. But yeah, determine the reasonable compensation, and then get the EIN applied for with the IRS. Alice, I see your accounting options available through the company too. We do have some partnerships. I can get that information to you at a later call, after this call, a little bit later. I see MB posted about another reason to get an EIN for sole proprietorship if you don't want to provide your personal SSN to vendors or other websites. That's a good reason why you might want a different ID number. Even though you're considered a disregarded entity for tax purposes, for financial purposes, you do want to. There are reasons to keep yourself separate from your business. So good call there. All right. I'll talk to the Illinois team. I'm not actually sure about Illinois law on that one, the $600 threshold for the 1099K. I know the developers for Illinois pretty well, so I will also follow up on that question. That's a good one because Fed state considerations, differences in law are always a tricky one. Being a California subject matter expert, I know that there's always lots of differences between Fed and state law that we have to account for in the software. All right, we are just right about time, so I think I'm going to wrap this up. But again, I just want to say thank you for everyone for joining the presentation, and I really appreciate it. Again, if I didn't get to your question, I believe that you can, through eBay, send me the questions. They'll compile them and get them to me, and then I'll follow up with all of you. So thanks again. Hope everyone has a safe and enjoyable Memorial Day weekend. Bye.